What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. In this video, I wanted to give you a quick update on the Pinterest strangle that I was talking to you about in my previous video, how I placed them, where I got the 58 call and the 47 put, and I want to give you an update on at what price I sold it at, just to see how a strangle can be really beneficial during earnings, okay? I also wanted to simultaneously give you examples with Facebook and Apple as well. I wanted to discuss the Facebook and Apple earnings with you guys. I didn't specifically have a strangle on either of them, but I also wanted to show you the risk of having strangle if I had placed it on Facebook and Apple as well, okay? So to start off here, Pinterest, obviously, as you guys saw, it shot up as high as 39 or nearly 40% around 10 o'clock this morning, and the calls went up like crazy, but then it slowly started declining, which was expected because this is an absolutely huge move right after earnings. I thought there might be a potential continuation. It looked like there would be around here, but then it started dropping off, so I just sold off around here just to make sure I could lock in my profits. So if I scroll through my history here, I'll show you. So I showed you in my previous video how I first got this strangle for $9.98, where I got 2 of the 58 calls at an average cost of $2.59 and 2 of the 47 puts at an average cost of $2.40 for a total of $9.98. And just before earnings, I bought one more 58 call for $178. So the overall, the 3 calls I had an average cost of $2.32, or a total of $6.96 for the 3 calls. And on the put side, I got just one more put, 43 put before earnings as well. So a total cost of $480 plus 170, which is $650. So around $650 for 3 of the puts. So that was a total net investment of $1346 for the 3 strangles. And pretty much right after open, I first sold this call at $10.85. I got out of the puts because they were going to expire worthless anyway. So I sold one put for $5, one more for $12, and one more for $10, which is about a $27 value for the puts. But on the call side, I had 2 more calls. I sold one more at $1,100 and the last one at $1,125. Okay, so overall the return on this was $3,327 for an initial investment of $1346, which is nearly a 2.5x in just 2 days. Okay, so when I was talking about how it would be a 4x or a 5x, it was mainly on the call side because I got the calls at $696 or approximately $700 and actually sold them at $3,300, which is a 4.5x. Okay, so that's mainly what I was talking about in my previous video. And then since I already owned 100 shares of Pinterest, I ended up just selling one covered call for November 20th for the $70 call here, and collected a credit of $235 on top of what I on the credit on the calls that I sold off. Okay, so that was the update on the Pinterest, guys. Wanted to show you how a strangle can be really powerful. But what I wanted to really show you is actually what happened with Facebook, for example. If I pull it up here. So what really happened with Facebook here is that even though earnings came out and they actually absolutely beat earnings, all of the FANG stocks that announced earnings today, other than Netflix, of course, was that they're all struggling to give proper guidance. That has been the biggest issue with all the earnings that came out today, which is exactly why, even though they beat earnings, the revenue guidance and the uncertainty there was what really brought them down. Okay, so in this case, if I had bought a strangle, which I did not, because I was expecting kind of a dud from all the major big tech after what we saw with Microsoft, because of the insane IV crush, considering how expensive the calls and puts were on Facebook, they would have gotten destroyed. And with the sideways price movement after hours tomorrow, I'm sure those calls and puts would have dropped by 50% or so. Okay, so that's exactly why I didn't end up buying a strangle on Facebook. When it comes to Apple itself, people have been pretty bearish on Apple right from the beginning. Analysts were expecting that because there was a delay in producing that 5G iPhones, and how they didn't really reveal the 5G iPhones until mid-October. They were really not expecting very good numbers from Apple's Q3 earnings, and that's exactly what I was expecting as well, because the iPhones got delayed so much. And so I ended up just having 3 of these puts. I sold out of my calls last week. I had a few more which I sold at a loss, but overall, because I took profits on the first few calls, it was still a net profit. But I just decided to buy a couple of puts just as a hedge, expecting that it might drop after earnings. And it says I'm down 31%, but the actual drop was today after hours. So we'll have to see how that's going to go out. I'll probably just break even. I'm not really expecting it to go up a whole lot, but that's basically how I played Apple. But again, I was very careful with the strangle, guys, because with this big tech, Microsoft was such a leading indicator that even if they have blowout earnings and they beat estimates, there's a good chance they wouldn't have moved so much, which is why I didn't buy a strangle on them. Okay. Now to quickly go over Facebook's earnings here, obviously their revenue has been incredible. They've shot up 22% from 17.4 billion to 21 billion here. Their total costs and expenses shot up 28%, which is expected. The operating margin dropped from 41 to 37%, which is interesting to see. But I think that was expected because of all the ad boycotting that was happening a couple of months ago, and there's a good chance that hit their profit margins as well as revenue. I'm surprised that they still gained so much in revenue in spite of that, but the profit margin is kind of an indicator as to what happened there. Here's where, so the daily active users were 1.8 billion on average, an increase of 12%. Monthly active users also increased 12% year over year. Family, both daily active and monthly active, also shot up 15% and 14% respectively. Their capital expenditures were 3.8 billion for the third quarter, and then cash and cash equivalents were 55.6 billion as of September 30th. Now, what really, everything looks pretty amazing if you actually strictly look at the numbers. But what really is not making the stock move, or what made it even drop a little bit, was the fact that looking ahead in 2021, they continue to face a significant amount of uncertainty, which is what pretty much all the big tech announced. Okay, if you see even here, we saw the daily active and monthly active users in the US and Canada decline slightly from the second quarter, which were elevated due to the impact of the COVID-19 pandemic in Q2. And in the fourth quarter, they expect this trend to continue, and they're actually expecting it to be slightly flat or slightly down compared to the third quarter. So when they give you an outlook like that, where there's so much uncertainty and they're actually expecting users to drop, that's definitely a cause for concern, which is why Facebook didn't really shoot up a whole lot in spite of blowout earnings itself. Okay, now switch. In addition, we expect more significant targeting and measurement headwinds in 2021. This could include headwinds from platform changes, notably in Apple iOS 14, as well as those from the evolving regulatory landscape. But basically, it's the fact that there's continuing uncertainty and the viability of transatlantic data transfers in light of recent European regulatory developments. And like other companies in our industry, we are closely monitoring the potential impact on our European operations as these development progress. So guys, basically there's just so much uncertainty right now that it's hard for investors to be confident and put huge amounts of money in. And in my personal opinion, I think a lot of investors were patiently waiting for all the big tech earnings, but I feel like trading volume might be low for a couple of days, at least until elections, because until elections are actually out, people won't really know which way the market is going to go, how it's really going to impact taxes, for example, which directly impacts company profit margins, as well as potential lockdown situation, potential in what way energy can go. For example, a lot of people expect that if Biden wins, the renewable source of energy are going to spike. So there are a lot of things that are still unknown that we won't know until the election results comes out next week. So I'm expecting a whole lot of sideways price action or just volatility between now and then. And to quickly go over Apple's earnings as well. If you look here, in Apple's fourth quarter earnings, they topped expectations with sales from the company services offerings and Mac computers hitting quarterly record, which is awesome to see. Their Q4 revenue was 64.7 billion, was the 63.4. Earnings per share also went up. Now, obviously, the iPhone 12 and the iPhone 12 Pro were not included in the fourth quarter results as they were introduced at the end of the fourth quarter, which is perfectly understandable. But the real cause for concern for Apple and why they actually dropped after hours was because the revenue from the iPhone came in lower during the fourth quarter this year than in the same period 2019, which is understandable because of the delay in producing their new iPhones. Which is exactly what it says here, which with customers having waited for the next generation iPhone devices to get released. Sales dropped nearly 21%, missing expectations for $27 billion. The company also posted a 29% drop in Greater China sales to 7.95 billion, comprising just 12% of Apple's overall sales. And in the same period last year, sales out of Greater China accounted for more than 17% of company-wide revenue. Okay, so that's mainly it, guys. I mean, even though they actually beat estimates, the fact that in some places there has been a pullback, and the fact that they are not able to give proper guidance for the future, and that the fact that there's still so much uncertainty is why none of them really bumped up a whole lot, except Google perhaps. But that's what I wanted to share with you here for today. The only way I'm planning to invest or trade over the next few weeks is mainly through spreads or iron corners, because volatility is absolutely terrible for options premium. There will be a lot of IV crush if stocks don't really move a whole lot. So spreads are what I'm going with, guys. That's mainly, even in my private group, I kept talking about selling iron corners to collect credit, or a put credit spread to collect more credit. So that's mainly what I've been focusing on. So if you want to get those alerts, be sure to join Discord, guys. The community is growing really, really fast. I'm really excited to see a lot of active members sharing their thoughts in there as well. So I'd love to see you in there. So if you enjoyed this, please just smash that like button, leave a comment below if you have any questions, and subscribe if you haven't already, and hit that notification bell, okay? Thanks again for watching, and until next time.